Hi guys, I'm Viruthishan. In this video presentation, we are going to learn about cash discounts. In the previous videos, we have discussed about discounts and types of discounts. If you haven't put that videos, I have given the link in the description so you can go and watch it first. Let's go to the video. We have already know that the purpose of cash discount is faster settlement. That means I'm borrowing $10,000 from my friend. My friend is telling that if I return the $10,000 within 1 month, if I settle his loan within 1 month, he will give me 10% discount. That means I can give $9,000 only to settle his loan, but he has given $10,000. But if I settle within the 1 month, I can. It's enough to give $9,000 and settle the loan. So in this case, he has given the 10% discount for the faster settlement. That means he is willing to pay me. I should give the amount within 1 month. So this is known as cash discounts. In this video presentation, we are going to learn about the double entries for cash discount. First step, we are going to learn about discounts allowed. Let's say there are two companies, A Limited and B Limited. A Limited sold $10,000 worth things to B Limited for credit. So B Limited should pay back for A Limited in a near future. But A Limited is telling that if you return the money, or if you pay back the loan within 2 months period or within 1 month period, we will give you 10% discount in the net amount. So A Limited has given $10,000 loan for B Limited, and A Limited is telling that if they settle the loan faster within the 1 month, we will give you a 10% discount. So in this case, A Limited is allowing discount. B Limited is receiving the discount. So there are two incidents. A Limited is allowing discount as well as B Limited is receiving the discount. So we are going to study both double entry systems here. So when we are allowing discounts, we should know discounts allowed is an expense. You should know that discount allowed is an expense. So when we are allowing, in the point of view from the A Limited, when I'm allowing the discounts, the expense is going to increase. At the same time, asset is going to decrease. That means before the discount, B Limited should pay me $10,000. But after the discount, cash discount, they can only pay me $9,000. That means they don't need to pay the $1,000, the discount amount. So in this case, the asset, the trade receivable is going to decrease. At the same time, expense is going to increase. That means when I'm allowing discount, the expense is going to increase. So as to the chart we have already studied, we know that when the expense is increasing, we are going to debit the entry. So we are going to debit discount allowed account. When the asset is decreasing, we should credit asset. So we are going to credit trade receivable. So in this case, discounts allowed account debited by $1,000, and we are going to credit trade receivable by $1,000. This is the main thing you should know. As well as the next main thing is when we are received, in the point of view of B Limited, B Limited is going to receive the discount from A Limited. In the point of view of B Limited, A Limited is a trade payable. That means B Limited should pay back the money for A Limited. So we can tell in this time, in the point of view of B Limited, the liability is going to decrease. The next step, discount received is an income. So the discount received, the income is going to increase. At the same time, liability is going to decrease. When I'm getting the offer, when I'm getting the discount, I can reduce the amount, the loan amount by the discount amount. So the liability is also going to decrease and the income is going to increase. According to the chart, we already know when the liability decrease, we are going to debit the liability account. So we are going to debit trade payable. At the same time, we are going to credit discounts received because discounts received is an income account. So when discount received, when the income is decreasing, sorry, when discount received is increasing, then income is increasing, we are going to credit the account. So the double entry is debit trade payable, at the same time credit discounts received. Let's do an example question so we can understand very clearly. So take a minute and try to state the double entry for the transaction. Received $13,000 from debtors, allowed cash discount $2,000. A Limited, let's say A Limited has received $13,000 from debtors. They have also allowed $2,000 as cash discount. As we all know, there are two transactions. One is we are receiving the cash. Cash received $13,000 from debtors. The next transaction is allowed cash discount. So we know when we are receiving the money, the asset is going to increase. Cash is going to increase. At the same time, the trade receivable, the asset is going to decrease. According to the chart, when we are receiving, cash is going to increase. So we are going to debit cash by $13,000 and credit trade receivable by $13,000 because cash and trade receivable are asset. So when they increase, we are going to debit the entry. When they are decreased, we are going to credit the entry. The next step, the second transaction, allowed cash discount 2,000. We have already studied discount allowed is an expense. So when we are giving discounts, the expense is going to increase. At the same time, the amount the receivable should pay to me is going to decrease. The asset is going to decrease. So we should credit trade receivable by 2,000 and we are going to debit discount allowed by 2,000. But you should know that we won't write these two transactions separately. We are going to join them. So totally we can tell when we add these items, we are going to debit cash by 13,000. The next step, we are going to debit discount allowed by $2,000 and we are going to credit trade receivable by total 13 plus 2,000. We are going to credit trade receivable by 15,000. You should remember this. We won't enter it separately, these two transactions separately. We enter in the ledger accounts these two transactions in a joining way. So you should know this method. The next item we are going to learn is the double entry transaction for settling the suppliers. So let's say We have settled the suppliers $10,000 less 10% cash discount. What is mean by that? Settled suppliers $10,000 less 10% cash discount. That means we have settled 10,000, but we are only giving 90% cash of 10,000. Other 10% cash is discount. So 90% of 10,000 is $9,000. So we are going to give the cash amounted to $9,000. Other $1,000 is a discount. So when we are paying back the money, the liability is going to decrease at the same time asset is also going to decrease. When I'm giving the money, my money is going to decrease. At the same time, liability, the loan is also going to decrease. So as we all know, so we are going to debit trade payable. At the same time, we are going to credit cash by $9,000. The next step, we have already learned the entry for discount received. So when we are receiving the discount, it's an income. So when we are receiving the discount, our income is going to increase. So we are going to credit the income account. That means we are going to credit discounts received by $1,000, and we are going to debit trade payables because the liability is going to decrease. If liability decrease, we are going to debit the entry. So we are going to debit trade payables by $1,000. So the next step is we are going to join these two transactions. So what can we do if we join these items? Trade payables debited by $10,000 and cash credited by $9,000. The next is discounts received credited by $1,000. So there's a mistake. That means we are going to credit by $9,000. So be careful with it. So these are the things you should know in the discounts, about cash discounts. I hope this video would be very useful for you. If you like this video, don't forget to like it and subscribe our channel for more videos. Thank you.